As I've shared in past videos, I'm using Strategy's preferred stock STRC, or STRC, to provide consistent and steady dividend income in my early retirement portfolio. I think STRC, alongside Strategy's other preferred stocks of Strike, Strife, and Stride, are revolutionary. They tap into Bitcoin's high growth trajectory while stripping away Bitcoin's high level of volatility. I've received some comments on my past videos about STRC and the other Strategy preferred stocks, and people were expressing concerns about what are the risks of these preferred stocks. I'm going to address these concerns in today's video, as well as share some exciting news that we got from Strategy this week that slashes away any doubt that they can pay the dividends. Stick around and I'll explain. I'm Michael, and this is B-tirement. As I said, I've received some comments from viewers on my past videos of people expressing some legitimate concerns about the risks of investing in STRC. I'm going to read a few of those comments. One person wrote, if there is a major market correction that draws down MSTR, which is Strategy's common stock, by 50%, how will that affect STRC? Somebody else wrote, what if Bitcoin prices stay under $50,000 for years? Another commenter said, what would happen to STRC if the price of Bitcoin fell to $60,000? Would Strategy be able to keep up the dividends? These comments raise some legitimate questions, and I'm going to try to answer those questions in this video. Let's start with a quick recap of STRC. STRC is a preferred stock issued by Strategy, and it pays an annual dividend at a rate of over 10%, and these dividends are paid monthly. So for example, if an early retiree invested $240,000 of their savings into STRC, they would receive dividend payments every month of about $2,000, and then they could use that $2,000 to partially pay for their living expenses without drawing down their principal. And these dividends are classified as return of capital dividends, which means they are tax deferred. So as you receive the dividends, you don't owe any tax. You only pay tax if and when you ever sell your STRC shares. So that 10% dividend rate really has a tax equivalent yield of over 17%. If you want a deep dive into how these tax deferred ROC dividends work, watch my previous video where I interviewed a Bitcoin focused CPA. Bitcoin price has been growing at an annual rate of greater than 40% a year, but with that growth comes a high level of volatility, as we've seen in recent months. In early October, Bitcoin hit an all-time high of $126,000, and then it plunged down to almost $80,000, and now it's recovering. Strategy is the largest corporate holder of Bitcoin, and they announced this week that their holdings have reached 650,000 Bitcoin. Their common stock, or MSTR, has seen even faster growth than Bitcoin, but with that faster growth has come even higher levels of volatility. With the preferred shares such as STRC, Strategy has issued new vehicles to provide more risk-averse investors the ability to benefit from the gains of Bitcoin with much less volatility. In short, Strategy expects Bitcoin's price to continue to appreciate at a rate of 30% per year over the next 20 years. That's why they're confident that they can provide dividend payments on the preferred shares that are in the range of 10% per year. Now let's dig into Strategy's presentation from December 1st and why I'm more confident than ever to put part of my early retirement portfolio into STRC. The slides I'm sharing today are from Strategy's December 1st press release, and you can find the whole presentation at strategy.com. Strategy shared that they have a robust capital structure that supports STRC and the other preferred stocks. Their debt represents just 11% of the company's value, and the preferred stocks represent a similar percentage. Their Bitcoin holdings are valued at $59 billion, while the annual commitment for their dividends for STRC and the other preferred equities is just $800 million per year. So at a basic level, they could cover their dividend payments for 74 years by selling down their Bitcoin reserve. The most exciting part of this week's announcement is that Strategy has built a US dollar reserve of $1.44 billion, and this is enough to cover the dividends on the preferred stocks for 21 months. And they intend to grow this US dollar reserve to cover 24 months of their total dividend obligations. This announcement should give investors a high level of confidence that Strategy will be able to make their dividend payments. With this reserve, Strategy explained that they could literally hold their breath for 1.75 years and make their dividend payments without the need to sell any Bitcoin or common shares. They explained that if Bitcoin only appreciates at 10.3% per year, they could continue to make the dividend payments and still be a profitable company. And they explained that even in the extreme condition, if Bitcoin fell to a price of $10,400, for example, if it fell by 19% for 10 years straight, their Bitcoin reserves would still be adequate to meet their liabilities. Strategy shared this cool illustration explaining the digital credit vehicle that they have built. They explained that their purpose as a company is to sell digital credit, which are the preferred stocks such as Stretch. They described that the primary fuel source for this vehicle is their 650,000 Bitcoin reserve. They describe this as a large Bitcoin reactor. And this reactor could fuel the company's obligations for 74 years. This week's announcement is that they've added a US dollar battery to the vehicle. This is the $1.4 billion reserve. They compared this US dollar battery to the large battery in a hybrid car. It can smooth out power to the vehicle even through turbulent conditions. And the vehicle is provided thrust by its 3 engines. These are the 3 capital markets that Strategy can tap in order to continue to grow its US dollar and its Bitcoin reserves. They can tap the equity markets by selling additional shares of MSTR or their common shares. They can tap into the highly liquid Bitcoin market by selling Bitcoin if ever needed or advantageous to the company. But the third engine is something I don't believe Strategy had ever discussed before. They explained that they could tap into the Bitcoin derivatives markets and sell derivatives such as call options to fund the company's obligations. Strategy believes that their digital credit instruments like Stretch are very compelling, and the market is just now starting to understand what they are, so they will continue to grow and grow in popularity. And as they do, Strategy will meet this need by issuing more shares of Stretch. And they also intend to grow their Bitcoin reserve over time, even above the current 650,000 Bitcoin level. Frankly, I could see Strategy get to the point one day where they hold over 1 million Bitcoin. In summary, I'm thrilled by the new developments that Strategy rolled out this week, and I'm more confident than ever that Stretch is a great way for me or other early retirees to generate consistent income with a portion of our retirement portfolio. Frankly, if you haven't studied Bitcoin or don't believe in the prospects for Bitcoin's continued adoption and growth, don't invest in Stretch. But if you do understand Bitcoin and expect it to have high levels of growth in the future, Stretch is a great way to tap into that growth while stripping away high levels of volatility. And if you keep an eye on the price of Stretch and buy in or add to your position when it dips below $95 per share, as it has a few times since it's been issued, you can even amplify the benefit that Stretch has in your portfolio, because Strategy has said that they are targeting a price between $99 and $101 per share. And if the price falls below that $99 price, Strategy will increase the dividend rate to raise the share price back up. If the price is between $95 and $99, Strategy will add 0.25% to the dividend rate. If it falls below $95, it will add 0.5% to the dividend. If Stretch ever trades above $101, Strategy may lower the dividend rate or issue more shares to bring the share price back down. And they've already done this 4 times, including this week, where they raised the dividend rate to an amazing 10.75%. I think of Stretch as my superhero savings account, and it yields much, much more than any savings account or money market does. I love the fact that Stretch has an amazing 10.75% dividend rate, the fact that these dividends are paid every month, and that they are tax deferred due to the return of capital tax treatment. I think these 3 reasons make Stretch a total winner for any early retiree. And the announcement this week that Strategy has built up a $1.44 billion US dollar reserve gives me high confidence that these dividends will be paid. If you like this video, please like, subscribe, and comment. I'm putting out similar content every single week. I'm Michael, and this is b-tirement.